Good afternoon and welcome to the Fiscal Philosophy YouTube channel. 2025 has been a very interesting year so far. I've done all right. I am, at the moment, I believe, ahead of both the SPY and the NASDAQ. However, it hasn't been a particularly great year for the SPY or the NASDAQ. However, I kind of went in assuming there was going to be some choppiness this year. That's something I predicted on a CFK episode. I said I didn't think there was going to be overall a very strong upside or downside performance in the market. More that there would be a lot of volatility and we wouldn't see a huge, as of like December 31st or whatever, a huge movement in one direction or the other compared to where we started. Now, we still have more than half the year left to go, so I don't know if that's going to end up being true or not, but it's what I expected. And I tried to pick things that I thought might hold up a little bit better with the pain days where we would be soaked in blood, because I knew some of those days would happen. But I've also tried to be on the lookout for opportunities, right? Because volatility means sometimes good companies get cut way below what they're worth, and when they come back up, you can sort of make your money back and then some, and have some pretty good results, in spite of the fact that the market as a whole maybe didn't move a whole lot over the year. So PayPal in this backdrop has actually been one of my laggards, to be perfectly honest, this year. And after Q1 earnings, people just were not happy at the revenue growth deceleration, which I'll get into momentarily. So the long-term trend line on their top-line revenue growth has been a deceleration, to say the least, over the last few years. Now, there were periods of reacceleration, maybe some cyclicality to how fast it grows, but this latest 1.2% compared to prior year's comparable quarter is the lowest. And I think it's the first time also where you could confidently say, hey, this doesn't even cover the average like 2.5% or whatever you might see for inflation. So in real terms, you could even say that that's a decline. A 1.2% increase is a decline, because this is based on transaction dollars for the most part, and if people are transacting the same amount, you would think with inflation that the transactions would be bigger, and therefore it would translate into like a higher revenue for PayPal based on that. So you could almost call this a shrink. The problem is that when they, like, in order to keep their revenue growth at like 8 or 9%, they were not necessarily only taking strategic smart revenue. And by strategic smart revenue, I mean revenue that's actually profitable. And a lot of that, I think, goes back to Braintree. And you also have the fact that for a long time, PayPal has sort of been this hodgepodge of different acquisitions that they've made in order to keep relevant and to sort of show like, hey, we're doing stuff, without really having like a coherent plan for like the whole company. It was just like, hey, we've got the PayPal platform and app over here, we've got Braintree over here, we've got Venmo over here, we've got Honey over here, we've got Zoom over here. And when I found out that Alex Chris was taking over, I was excited to hear what he was going to do, and this is something that he's really been working hard to address, because what matters more than pushing out 8 or 9% revenue growth at any cost is really taking this huge amount of revenue you already have, keeping it, more or less intact, stop it from completely going out the door. But if there's revenue that's deeply unprofitable for you and hurting your margins, let some of that go, or don't take it in the first place, and actually try to drive cash flow and profitability up. The gross margins here will show you what I mean. As you can see, back in 2020, they were pretty high, and they sort of, as you can see, kind of dipped into this valley, right? And like 5 quarters ago, the gross margins were actually below 40%. They were like 39%, right? And then at some point you have Alex Chris take over, and since then you can see it's been slowly inching back up since he's started to really try to focus on the idea of profitability in their revenue. Now, granted, we've only gone from like 39-ish% to 42.5%, but it's been like kind of a steady thing where it went from like 39 to 40 to 41, 41.5, and now 42.5. So this is definitely an area of focus, and I realize that these don't sound like dramatic differences, but when you're talking about billions of dollars in revenue, a few percentages worth of expansion in gross margin end up making a very big deal at the end of the day, especially if they find ways to cut operating expenses, etc., which I think that's something that they're definitely looking at. So let's not get it twisted. This does make a difference. This is important, and it's something that Alex Chris, I think, is really pushing for. And it's what you want to see as a shareholder, because eventually this expansion in gross margins will translate into that bottom line, that net income, that free cash flow, which they can use on that buyback program. And as long as the stock is relatively cheap, I want them to buy back as many shares as they can with their net income and cash flow that they generate. I want to own more. I want each of my shares to represent more ownership of PayPal than last time, basically. While they don't pay a dividend, you do get a very nice tax-efficient yield. They've been consistently buying back somewhere in the neighborhood of 5 or 6% a year, 6.48% over the trailing 12 months here. And this effectively, especially if they continue to expand margins, even if revenue growth stays very minuscule, what could happen is EPS gets driven up rapidly at a certain point, at which point the market has to kind of step in and say, hey, like, are we going to assign this company like a 4 or 5x PE? And the price will eventually follow if the EPS goes high enough. And look, they could still reaccelerate revenue growth at some point, but I think it's important that they draw a line in the sand and say, hey, we're not going to completely sacrifice our margins on the altar of top line growth. And in the meanwhile, while the market hates it, they deliver a 5 or 6% buyback yield, and the patient get rewarded in the end. At least that's how I think and hope it will go. Comment below if you are also in PayPal, or if you're thinking about it. Give me your thoughts on how the CEO Alex Chris is doing, if you think that the revenue deceleration and a focus more on margin expansion is the right way to go, and any other thoughts you have on the subject. Also, my Discord is linked in the description. It's free. I look forward to having some interesting conversations around investing in there. Always look forward to hearing from you. I learn just as much from you guys as any of you may indeed learn from me. Take it easy, everyone.